Eli Lilly has been making headlines, and not just for its incredible drug pipeline. Recent price action has investors scratching their heads. Is this just a blip, or is something bigger brewing? We're diving deep into Eli Lilly to figure out, is it a buy? The market narrative around LLY is a real mixed bag right now. On one hand, everyone's buzzing about their phenomenal GLP-1 drugs like Mounjaro and Zepbound. These things are flying off the shelves, driving incredible growth. But then you have this looming concern, highlighted by recent news. Yes, I'm talking about the political chatter, like President Trump's comments on weight loss drug pricing. This has injected a huge dose of uncertainty, making some investors very nervous about potential headwinds for these blockbuster drugs. So we've got fundamental strength battling political risk. All right, let's get to know Eli Lilly and Company. Founded way back in 1876, this Indianapolis-based giant discovers, develops, and markets human pharmaceuticals worldwide. They're a powerhouse in several therapeutic areas, from diabetes with names like Humalog and Jardiance, to oncology with Alimta and Verzenio, immunology with Taltz, and even neuroscience with Cymbalta. Their big guns right now, the ones everybody's talking about, are those GLP-1 agonists like Mounjaro and Zepbound, which are just crushing it in the cardiometabolic health space. Management themselves gave a highly optimistic Q2 2025 guidance, forecasting strong revenue growth and market share gains, especially in those blockbuster segments. Okay, let's reconcile these two narratives, the company's bullish outlook versus the market's jitters. The company sees blue skies, driven by product demand. The market, however, is heavily weighing external risks like political intervention. First up, our base case scenario, which we're calling steady growth, manageable headwinds, and we're assigning it a 40% probability. Here, we assume LLY continues its strong growth, fueled by Mounjaro and Zepbound, and the promising oral GLP-1, or forglipron, gets to market successfully. Political comments? They cause some moderate, manageable pricing pressures, but nothing catastrophic. The current technical downtrend is just a temporary correction. To get to our fair value of $1,110.20 in this case, we start with the current diluted EPS of $15.08. Project a one-year forward EPS using a slightly conservative estimate of their 5-year EPS growth rate of 41.44%. That gets us to $21.35. Then we apply a PE multiple of 52, just a hair below their current one, to reflect that sustained high growth but with an acknowledgement of market risks. Now, let's talk about the everything goes right scenario, our bull case, which gets a 15% probability. Why only 15%? Because right now, the bearish technicals and that ongoing political noise make it a bit harder to envision. But if it happens, we'd see oral or forglipron get expedited approval and blow past expectations. Political rhetoric on drug pricing? It fizzles out, allowing Lilly to keep its strong pricing power. Mounjaro and Zepbound's growth would accelerate even further, globally. The technical downtrend would reverse sharply, perhaps even breaking into new upward momentum. In this case, starting from $15.08 EPS, we'd project an accelerated one-year forward EPS growth of 50%, reaching $22.62. Then we'd apply an expanded PE multiple of 60, reflecting premium growth and market leadership, giving us a fair value of $1,357.20. And finally, the political storm and technical trouble scenario, our bear case, which we're giving the highest probability at 45%. Why so high? Because the technical analysis, which we'll get into in a second, strongly supports this. The stock just broke a key support level, signaling further downside. Plus, those political comments could lead to real action, forcing LLY to reduce prices or limit increases for its key drugs, severely impacting that high-growth cardiometabolic segment. We could also see manufacturing issues or delays for orforglipron. So, for the valuation here, we take that 1508 FC, project a significantly reduced one-year forward growth rate of 15% due to pricing pressures and headwinds, getting us to 1734. Then, we'd apply a contracted PE multiple of 35, reflecting increased regulatory risk and dampened sentiment, leading to a fair value of $606.90. All right, let's pull up the chart. Here's what I'm seeing for LLY, and it's certainly adding to the caution. The stock is clearly in a downtrend channel. What's more, it recently broke down below a pretty significant previous support level of $807. That's not a good sign, folks. Looking ahead, the next key support levels we need to watch are $788, then $730, and further down at $650. This technical weakness is a big reason why we're leaning a bit more towards that bear case in our probability assessment. So, after weighing all this, is Eli Lilly a buy? Based on our scenario analysis, and especially considering the current technical breakdown and the overhang of political uncertainty, my verdict for LLY right now is a cautious not yet. While the fundamentals are incredibly strong, that immediate technical weakness, combined with the political noise, means there's still room for potential downside. The bottom is likely not in at these levels. For those looking for potential entry points, if the bear case plays out, our fair value drops to around $606.90. Combining that with the technical support levels we just talked about, especially 730 and 650, these could be interesting areas to watch. The middle ground, our base case, is around $1,110.20, but we're giving that lower probability right now. Patience is key here. What do you think? Are you bullish or bearish on LLY? Let me know in the comments below. And if you found this deep dive helpful, please hit that like button, subscribe to Is the Bottom In for more insights, and ring that notification bell so you don't miss our next episode. All right, folks, before we sign off, remember this is for informational and educational purposes only. I'm Dave. I'm just a guy on YouTube. I'm not a financial advisor, and this isn't financial advice. Investing involves risk, and you could lose money. Always do your own research, consult with a qualified professional, and never invest more than you can afford to lose. Past performance is not indicative of future results.